To this day, I don't trade a dime of my own money. All the accounts that I manage are through either my private investor or prop firms like FTMO. And this eliminates all of the risk to the trader. In this video, I'm gonna show a beautiful gold sniper trade that locked in a payout for April. And for all the trolls that say it's easy to do that in replay mode, I'm gonna have my editor put a clip of this trade running live right here so that you can see it is the same markup all taking place on April 6th. And full transparency, going into this trade, I was in slight drawdown, which fully recovered the balance, putting me into overall profit for the payout. So let's hit the charts. All right, so this is a little bit of a unique setup. This is definitely not one of my normal setups, but this had some really good price action that I took advantage of that put me on the board for blue, profitable for the month of April. So I'm gonna zoom out to a 4-hour and I'm gonna show you why this trade was a little bit different than my normal trades. If you're been around the channel, you know that I am a big advocate of the trend is your friend. Getting that higher time frame alignment, even if you're a lower time frame trader and you're scalping. So we can see price was clearly bullish, and just recently we can see a sweep of this low here, which started a pretty significant bullish run up to this point here where it started to stall out and it started to retrace. So at this point, once we have these two swing points, this swing low and this swing high, anything that is counter to this, meaning if you're shorting, this is a retracement and you're trying to get maybe some short-term selling opportunities to be in and out of the market, because this can turn at any moment because it's bullish and we have a higher time frame impulsive move here. So I'm going to drop to the 1 hour and I'm going to start breaking down my thought process behind the setup that I took. So this is what took place the day before, and I'll lead up into what I was looking at here. So once price made this big move, we can see momentum started to fizzle out here, and we kind of had a little bit of a range right here, and then a strong push up running above these highs right here. As soon as price ran those highs, we can see a strong rejection, a 1 hour bearish engulfing candle, followed by this next 1 hour bearish candle, which made a low down here. And with this candle close here, if I switch to a line chart, we can see that this move to the downside broke structure. And we know that because here is our last swing point here. This is our last higher low before this higher high was created. And we can see that push down, breaking structure here. So let's go back to the candles. So after this move to the downside for the rest of New York, we kind of just made a little bit of a retracement and started moving sideways. And then right before we entered Asian session, which is this white background here, we can see price pushed up, and then we had this move to the downside coming below this low, making its own low right here. So this was our current trading range right here, our swing high to our swing low. That when I came in to the office, this is what I was looking at with price retracing. And I want to point something out that's really important. Look at the difference between this price action here and this price action here. This is very impulsive and it's all black candles. So if we look at this price action here, it's going to be more candles, choppy candles. So we can see a lot of wicks on each side, some bearish and bullish candles. If I drop down to a 30-minute or even probably a 15-minute, you'll see it a little bit clearer. So here again, a very strong move. And then this is just up and down, up and down, up and down. And that is an indicator of a flag pattern, which has a strong probability of continuing. So let me just demonstrate that for you. So if you see price make a strong push down, down and it makes a lower low, that is what we would call a flag when we see this type of price action following this impulsive move, and we would anticipate a continuation move like this, with this swing low being the primary target. So coming back to the 30-minute time frame, this is what I was looking at when I jumped on. So the first point of interest that I was looking at was that 1 hour candle here. So I'm going to flip up to the 1 hour and then we'll come back to the 30-minute. So that is the 1 hour candle. That's the last up candle before this impulsive move. So that is the 1 hour. I'm going to label it. I always label my raise in all my lines. Now I'm going to drop back to the 30-minute and I'm going to mark up my second point of interest, which was right here. Now I'm going to label this. This is the last up candle, and I went to a 30-minute just because I really like to see that 2 candle pattern, that last up candle with the engulfing candle. Now this is the second point of interest because this is the last up candle before this impulsive move, and price can come back and react and do a number of things. And one thing that I really try to stress to traders is when you find something in the market, don't marry that one thing, because it can blind you to other opportunities or other variations of the opportunity that you're currently looking at. So what I mean by that is there's a few possibilities that can take place here if price is going to actually break down and come for this low here. And we can see price just respect this 1 hour candle here and break down and do something like that. So that would be option number 1. Option number 2 could be price just running above these short-term highs like this before making a strong push. So it'd be running on highs, then making the move. So that could be another possibility as well. And then our third possibility would be price coming all the way back up to the 30-minute candle before it starts breaking down. So with different variations that can take place, it's good to mark up key areas, and then you can have a game plan for each one. And that way, when something happens in the market, you're not going to be reactive. You're being proactive because you're prepared for it. So with either one of these setups, given that I would personally class this as a higher risk setup, because again, this was at the top of a strong move, and overall this is reading that this is going to make a pullback before this, a continuation. And there's no rule that says price has to pull back deep. It can pull back short, it can pull back to the equilibrium of this move here. It can do a number of things before it continues on with its bullish move. So that's why I'm classing this as a high risk setup. And it's something that if you watch my channel, it's not the usual setup that I'm looking for that is in alignment with that trend. So it would be in a bullish scenario with what we're seeing here. So the next thing I'm looking at, now that we have structure points and we have key areas, is targets. So the first target, like I said, is going to be this swing low, and this is also Asian low. So I make my targets green just to keep things organized. I'm going to label this Asian low plus swing low. And then the next target is, we can see with this strong push up, we have a lot of imbalanced price action here. So that is part of my thought process, that price needs to come down, follow this structure, run Asian low, and come back and rebalance this strong price action here, this inefficient price action. So I like to look at these on 5-minute, 15-minute, and we can see with this strong move, there is a lot of inefficient price action that we would anticipate to be rebalanced. And what we're looking at is a 3-candle pattern. So we can see this candle here, and I can see the wick, and then this next candle just absolutely launches. And then with this next candle, we can see the open here, it continues. So there's an inefficiency here. So we can either mark that up on the bottom of this open here, but here's another example. So we can see the high of this candle. Here's the next candle that continued up just like this one. And then the next candle, we can see the opening and the low, where price opened here and then traded into this candle and made a low right here. So there's a disconnect between this low and this, or excuse me, this little high and that little low. So that would also be a little area of imbalanced price action. But given since this is just clustered together with that little gap there, I would just take away this one and I'm going to just drag this one right up there. So once I have that, I'm going to drag this over. And the next thing I'm going to do is go back to the 1 hour time frame, and I'm going to draw my fibs from this trading range, my first point of interest, down to my swing low. And we can see that my fib extension levels here, my profit taking levels fall in this imbalanced zone here. So this is primary target, and this is all bonus if price can come down into this area here. So now that we have our structure points, we have our key areas, and we have our targets, now it's how do I plan to get into a trade with 3 different possibilities. So when I have the areas, so let's take this first one here. And what I'm going to do is I'm going to slide this over here and just get it out of the way so we can really focus on the price action. What I'm going to do is I'm going to focus on structure. So if I go to a line chart, we can see the structure here, higher lows, higher highs, and that is signaling the retracement. So if I get a break of this structure, this will indicate that price is ready to continue. And then when I couple that with manipulation, this for me is really the signal that price is ready to go, especially when I match that up with time. And I'm primarily trading gold at 8 a.m. to 9 a.m. And this is when we have the most volume present in the market with the London and New York overlap. So what that would look like is something like this, where price could just spike up above this high, show a strong reaction to the downside and break structure, or something along those lines. And that would be the same thing for this if price pushed up, and then I see a nice push up above those highs, and then a strong reaction to the downside breaking structure. That would also be a signal. And this same pattern would also apply to this candle. And since this is the high, you could fire right off of this, but without this added confirmation at the top of a bullish expansion and you're looking to short, it's just going to be a risky trade. And normally I don't take risky trades unless I'm in a position to do so, or if I just feel really confident about the setup. So what we're going to do is we're going to drop down to the 5 minute, and I'm going to start walking you through exactly what I was looking for. So I'm going to switch over to a line chart, and at this point here, we can see the structure very clearly. And we can also see with this last swing low, with this push up here, we can see a strong move to the downside breaking structure. So that is clue number 1 that it could be ready to continue. And the next thing that I'm always looking at, is there a news event? So I'm going to pull up Forex Factory. We're going to go back to April 6th, forexfactory.com. We're going to go to the economic calendar, and we're going to go back to April 6th. So here is April 6th, and we can see at 8:30 we have USD unemployment claims. Now this is when I was looking for the manipulation to happen, now that we have the break of structure. So coming back here, I'm going to plot that on the chart. So here is 8:30 right there with that dotted vertical line. Now I'm going to press play, and we're going to watch price action. So now we can see with that maroon background, this indicates that New York session has opened at 8 a.m. and now we're in the overlap. Let's press play. So we can see right there, price started to break down, and right here we have the news event. So I'm going to move this out of the way so we can just watch to see what happens with that 8:30 unemployment claims red folder news event. So right there, we can see a nice spike up above these short-term highs, and then look at that reaction right there. And then we can see a strong continuation move here. So with this information, One being prices in my key area. Two, we have the time correlation that we're in the overlap. Three, we have the break of structure. And four, with our pairing of that news event at 8:30, we have bearish manipulation now present. So at this point, now it's time to go to work. The first thing I'm looking for is, can I get entry somewhere in this manipulation candle? Meaning maybe there's a candle right here, which I would use for my entry if price were to retrace back into it, and I would put my stop above the high. So I'm gonna drop down to a 2-minute time frame, and we can see there is just wick here. If I go to a 1-minute time frame, again, there is just wick there, and that's a pretty big candle there. So if I take this up here, we can see that's about a 44 pip candle, and we won't get the risk to reward that we're looking at for our primary target. So we can see down here, that's about 80 pips. So that means you're gonna get a 1 to 2 risk to reward, and that's not something I like. If I'm gonna execute a trade, I need at least a 1 to 5 risk to reward before I start engaging with a position. This is where I brought my focus. So we can see price here starts pushing up. It looks like it did a little bit of a test here, started pushing down, and then we had this candle here. We saw a push up followed by a bearish engulfing candle, and then we can see price continue down and making a low here. So if I go to a line chart, we can see we have a new swing here and structure points that I can focus on and align my stop loss with. So I'm going to go to a 2-minute time frame just to clean this up a little bit. It's going to show the exact same thing. So there is the candle here. I'm going to put a red line there. I'm going to also label this. This is our 2-minute and 1-minute candle here that created that structure point after the manipulation. So at this point, here is entry number 1. So now you can see down to our primary target, we're getting that risk to reward threshold where this is just over a 1 to 5.5. So I also had a stacked position on this trade. I'm gonna show you exactly where that is as well. But here was my first entry. Price started to come up really quickly. It came right into this candle, wicked away. That is where I market executed my first position, as you saw on the video clip of my active trade. Then we can see price push away pretty quickly, and it started to just run a little bit of choppy price action here. And then we found this bottom down here, position running really good. I'm gonna jump up to a 30-minute time frame, and going back to what I said at the beginning of this video, here is the impulsive move, and look at the flag. And then it's producing another impulsive move just like this initial move here. So again, this is just a really good example of the characteristics of price action when they're expanding, pulling back, and continuing, that can really help you with direction. So now we can see this is a strong impulsive move. The structure is there, the time is there, and it just makes this low here a very obvious target. And at this point, I became very confident with where price was going and that this was going to be a very solid trade. So at this point, we can see price is running really nice, just under 1 to 5. And I'm really confident at this point that price is coming down, not only for this low, but into this imbalance here. And there's a couple spots here that I'm really liking too for my add-on. So if you saw in that video clip, I had 2 positions here. The next position that I used was right here. And the reason why I took this is if I mark this up here, you can see we have some lows, and then we can drag that over. We have a little bit of a break retest level, and I don't like to align myself with stop losses and break retest or resistance or support levels. But this candle right above this area here with relative equal highs, we can see a very similar pattern. We can see price push up above this short term and this short term high, and again, it's followed by an impulsive move down, which created a structure point. So when price were to come back into this area, I would be ready to execute this. And at this point, my initial position is running risk free. So I'm going to slide this over here. I'm going to add the second short position here, and I'm going to put it down to the imbalance, and let's press play. So at this point, we have a low established, and you'll see that price started making equal lows. So I'm really loving this. The targets are all there. Everything is looking really nice. And then price starts pulling back. But that's perfectly okay because I'm prepared for different spots where I'm going to add in and scale into this position. So we can see price starting to make its retracement. I'm going to speed this up a little bit here. And we saw price come right above this level here into that candle here, a very nice reaction. And then this is really where gold kicked on the jets and started to fly to the downside. So at this point on that video, you probably saw it look just like this. So now we have a really nice 5-minute engulfing candle, price making a nice push here. And now I'm dropping to the lower time frame, and I'm managing my position based on the structure of this impulsive move. What I was looking at here, if you look at the video, this is what you saw. You saw the 5-minute candle up, the 5-minute engulfing, and the 5-minute low. And then I'm going back to the 1 minute here just to show you where I ended up getting out of this trade. So at this point, I'm gonna slide this over here. We can see this last candle here, and I'm looking at this area of imbalance price action right above it, right in this area. And I'm really in a good spot here. So I'm watching price if it's going to do one of two things. It's either going to pull up into this little candle here and just keep running. So that would look like something like this into this candle and keep going, which I thought was going to happen at first, or price push up above that high, come into this imbalance area and continue. And if it were to break and show that it was going higher than this imbalance, that's where I was going to close. And I would have been perfectly okay with that because I'm sitting at really good percentage gains at that point. So at this point, it's more of a trailing stop profit. So I'm going to press play here. We're going to slow this down a bit, and we can see price started to react. You can see there it tested in that candle. I honestly thought at that moment it was going to just take off, and then it just made this little double bottom. So I saw that and I was like, okay, it's definitely coming deeper. We still have a lot of imbalance. And then I saw price push up. It came right into this imbalance, showed a nice little reaction here, and then all of a sudden it just made another strong push. And when I got that strong push down into this area here, right there, that is where things just started closing for me. So this was just a really, really nice trade. It just worked out. I am not always stacking positions like this. Usually I do it when I am in a position profit wise. So, you know, if I'm up on the month and I'm in a position to add and scale more risk onto a setup, that's one thing, that's where I do it. Or if I'm just really, really confident in the setup like I saw here. So hopefully you got some value from this gold breakdown, and I'll see you in the next one.